Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Sebastian, Chief Operating Officer over Option Pit, to discuss trends in the Nasdaq Volatility Index, or what we call VOLQ. And if it's signaling, it's a time to buy. And Mark, whether you're looking at VOLQ, VIX, or a number of other indicators across the volatility complex, I'm kind of surprised to see just how low they are trading relative to the volatility we're seeing in the equity markets. I mean, we're taking steep losses here multiple days in a row.
Yeah, and it's concerning, because what this tells me is not that, oh, maybe we're near a bottom, but people aren't hedging. People are just selling. And so we could be in for some pain for a while here in the NASDAQ and in the S&P, because there just does not appear to be anybody that is willing to step in and buy at these levels in the NASDAQ 100. And there's still, I think, potential downside, because the NASDAQ 100, when you look at the major stocks in there, Apple still has plenty that it could drop before it would catch up with the rest of the NASDAQ. Tesla is still strong. Amazon a little softer. Google a little softer. But some of those mega caps are still pretty firm and have been used as flight to safety. And if that flight to safety starts to fail, that's where maybe we start to see people really running for the hills. But the lack of hedging is confounding. And to me, I interpret that as traders are just simply selling.
Right. Well, Mark, speaking of selling, I also noticed last week that they were selling premium as well. And to me, I thought, perhaps it's a little bit expensive to buy protection here. But when you look at it, when we had the sell-off in March and April 2020 with the pandemic, we were looking at levels over 80, right, in the VIX.
Yes.
And we're only at 34.5, I think, right now, spot VIX. But the volatility kind of feels the same. So if they're selling premium last week, I mean, there's some juice there, but it's not that expensive relative to where we were a couple of years ago.
Yeah, I mean, the trading that we are seeing is in the financials. We're seeing a lot of traders putting on bearish bets. The one sector that has actually remained strong is the most boring sector of all, consumer non-discretionary, where names like Coca-Cola, Altria, Kellogg's, Kimberly-Clark, Procter & Gamble, they remain strong, but that is about it. Even energy, which has been one of the really strong sectors of 2022, is taking it on the chin today. The VOLQ priced at around 38. They're looking for a little bit more than a 2% move per day. That's about what we've been getting. So you could say VOLQ is somewhat fairly priced, but typically there's a little more risk premium built into options, and that just is not there. Could be why we're seeing, with VOLQ at 40, if you have levels that you're interested in getting into the Qs or Apple or Microsoft, they're going to give you a pretty good, decent amount of dough to sell those. But the downside and the EPS, the earnings multiple compression that we're watching right now, until that stops, I don't know where the floor is on a lot of these names.
Yeah. Well, I mean, the CPG space makes sense, right? The consumer packaged goods. I understand that. I mean, where we live on the East Coast, gas is well over $5. We see it in prices for flowers. Hello, Mother's Day yesterday, going shopping for that. And not even just because of peak season for it, but from my understanding, there's supply chain constraints even in that because they're shipped in. We see the prices with food anywhere from poultry to eggs to milk. If you can't afford that kind of gas to take the road trip for your summer vacation, because you have to buy toilet paper and food, it makes sense to me.
Yeah, at a certain point, those names are going to start to come down, because traders are going to be, traders and money managers, they're going to sell their winners to try and buy some of these losers, and or to cover the losses and the margin on some of these. So I think there's going to be some particular downside in XLP. We're already seeing some of that in XLE. It drops much more, it's going to start to get interesting, because oil is really expensive, and they're making money hand over fist. Again, I really worry about some of these mega caps, Apple, Microsoft. Apple in particular, which has been a safe haven, looks like it wants to break 150, could head back to 140. Downside in May options, not overly expensive in Apple. We could see, if we're going to get that shock, that big vol pop, feels like we're getting close to it. It could happen this week or early next week. I think we're going to see the VIX go to 40. We're going to see VOLQ potentially make a run at 45. VXN, the VIX of the Nasdaq, going to the Nasdaq 100, potentially making a touch at 50 because there's about 8 stocks in the Nasdaq 100 that are still holding up, and the rest of the index has just been incredibly soft.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.